Well, I think earnings, if you look at them more broadly across the globe right now, have actually beat expectations. So if we look at the US, already they were sort of high expectations. They've been fairly robust. We're seeing some downgrades in the US. I think it's a bit more euphoric. But if you look across areas like Europe and Japan, earnings growth has come in at around 11%, so very positive. So I think when we look at equities now, valuations are clearly not cheap anymore. They're probably around fair value. But if we see earnings growth through, I think that should drive them higher.
So we're driven by earnings as opposed to fundamentals at the moment?
I think it's a combination. So if you look globally, we're seeing economic data has improved. Sentiment indicators are quite robust. If you look at consumer confidence, it's been increasing. PMIs bottomed out in the second half of last year, sort of reaching 7-year highs. So we're seeing very robust economic data. But of course, you need earnings delivery to make that more sustainable. So I think across the board, we've got robust economic data, and we're starting to see the earnings delivery coming through, which should hopefully make the rally more sustainable rather than just a risk bounce that we saw in the last quarter last year.
I would challenge that to some extent because we're also trading on hope for tax cuts, hope for infrastructure spending, and primarily that's happening obviously in the US. At what point does the fatigue of hoping set in?
Yeah, and I think the US is a special case where a lot of that hope has been priced in, infrastructure spending, tax cuts, deregulation. So I think in the US market, it definitely feels quite euphoric. And I think some of those expectations are probably due a pullback until we see that policy delivery coming through. But I think if we look at Europe and emerging markets, valuations are much more attractive. We're seeing better earnings growth coming through. So I think when you look from a value point of view, I think Europe looks much more interesting in that regard. Same with emerging markets, where earnings are starting to improve, fundamentals are getting better, and you're getting at much more attractive valuations.
When it comes to Europe, the question that we've been asking around this desk is, the French elections, are they a binary event for equity investors or are they not? We've had many people on the show arguing both sides.
Yeah.
Where do you stand? Credit Suisse, for example, came out yesterday saying that if Le Pen wins, European equities could fall by as much as 25%. Is it really going to be that binary?
Well, I think it's difficult, and I think we learned one thing last year was it's very difficult to predict political outcomes. It's even harder to predict how markets will react to that. So as long-term investors, we try not get up, trying to predict or forecast political outcomes. It's much more looking at fundamentals and the valuations. And what we did last year was we used a lot of that political volatility to add sort of to opportunities, and I think we should probably see more of the same, where volatility around events such as Le Pen, the Dutch elections coming as well, could potentially be sort of opportunities for us.